Welcome back to the Roger Hedgecock Show. Glad you're there. You know, there is no more worrisome part of the economic difficulties we have gone through over the last number of years than the continuing crisis in housing. And this touches people so personally because so many people are underwater, right? They owe more on the house than it is currently worth. Very troublesome. And there are some parts of the country that are in very bad shape, Las Vegas and others, where almost everybody is underwater or foreclosed or in a short sale or any of those kinds of things. Now that's eased off a little bit here in San Diego, but it continues to be a problem. So today, with the election 40 days from now, I thought what we do is compare what Barack Obama as president has tried to do about this problem, what Romney is promising he will do in his plan for housing. And of course, our housing expert is Mehran Aram. Welcome back to the program. Nice to see you.
Thank you, Roger. Always nice to be back.
Now, Mehran, you were involved in helping people, and you know, with this underwater situation, refinancing situation. What were the Obama policies that you were working on, and have they worked very well?
Well, the Obama policies really did not work very well at all. One after another, he came up with one initiative, then another one, then HARP 1.0, then 2.0. So many different ones were promising. Sheila Bair, by the way, just came out with a book. And in there, she really exposes all this, that the administration really didn't seem to care much about the homeowners at all. And so they kept kind of in a haphazard way, try one thing, try another. Oh, we're going to help 8 million people, 4 million people, 3 million people, and it never helped that many people. So they kept tweaking it, and HARP 2.0 was probably the most effective that recently took place, allowing people who are underwater to refinance, but that has its own problems.
Like what?
First of all, people are under the impression that no appraisal is necessary. Well, if you get an approval, online approval from Fannie Mae, Freddie Mac, and it does not give you, does not waive the requirement for an appraisal, that loan can be denied. Plus, the lenders are so overwhelmed with this. There's so much bureaucracy that sometimes 2, 3, 4 months, some of these loans stay in place. So much so that we stopped promoting them as of yesterday. We said, if people come to us, we'll help them. But it's not an easy thing necessarily to put those programs into place and actually make them work. So most of the Obama administration programs have not been very effective at all.
Now, you've gone over
it's all government-based.
Well, there's the thing. I mean, because then you know you're going to have forms and bureaucrats and this and that and all kinds of time because of the process. Now, Romney Ryan has put out the Securing the American Dream and the Future of Housing policy as of September 21 as part at mittromney.com as part of the Romney plan. You've reviewed this. What do you think about this plan?
I've reviewed it. I really like it. I noticed there's not tremendous amount of detail, to be fair, but then I started thinking to myself, if there was a lot of detail, it would be again 2,000 pages.
Yeah.
So it's a pretty nice summary. And what it really outlines is the fact that we have a businessman here, with all due respect for our wonderful president. We have hopefully President Romney here, who's a true businessman, who's very business-minded, very market-oriented. And one of his quotes, very interesting, was in there, which is something actually I've talked about on the air before. He said, well, if you meddle with the free market, you will have problems. So don't wonder why we are where we are. So what does he propose to do? So what he's proposing to do is to really get the private enterprise more involved rather than just government. So he's basically saying that you pass Dodd-Frank, we're going to replace that. We're going to get rid of that. It's crazy. It has certain provisions in there that talks about over 1,000 pages just to explain what a qualified mortgage is. Mortgage companies can't even figure it out. Wow. There are some mortgage companies that now have more lawyers and compliance officers than they have loan officers and people trying to help. And in fact, if they violate some of these regulations, they get their hands slapped very, very hard. So that really is helping depress home ownership. So huge issues. They're supposed to have...
So repeal Dodd-Frank.
Repeal Dodd-Frank.
What else would he do?
The other thing that he's going to do is he's going to look at purchasing about selling about 200,000 homes that are now currently owned by the government.
Fannie Mae and Freddie Mac own hundreds of thousands of homes that have been foreclosed on that are sitting there. Now, you know what happens when a home sits there. It deteriorates. Somebody has to pay for the maintenance.
That's exactly what he points out in his plan, that 200,000 homes represents about half of all the vacant homes in the country. Which is very, very interesting.
Yeah.
And a vacancy...
Owned by the federal government.
That's right. So a home that's vacant does huge damage to that neighborhood. It also increases crime, increases cost of police, all kinds of damage done, and it decreases on average $8,000 to $18,000 of home value when you have that.
Makes all kinds of sense to just
Makes
sell them.
all kinds of sense. So that they're going to put a plan together, try to unload that, to sell it, to have actual people living there, real people, tenants, new owners, someone, because that's going to help the housing market. And they want to also deal with the fact that Obama and the administration did not really deal with this too big to fail issue at all, because they didn't touch Fannie Mae and Freddie Mac. You've
Right.
talked about this on the air
Right.
quite a bit on your show. They haven't even dealt with that. So Romney wants to deal with that and have something more concrete in place to kind of rein them in and free up free enterprise, because a lot of private individuals or investors saying, I don't really want to touch that. I don't want to get into the private mortgage market, so I don't know what the role of the government is going to be,
Yeah.
what kind of support I'm going to have.
Yeah.
So it's kind of holding back the private money coming
Now,
in.
at the same time, one of the big benefits to home ownership in the last couple of years has been how low the interest rates have
Yes.
gone. And I understand now you can get a 30-year mortgage for what, under 4%?
Well, what happened is, since the last time we talked, which has been like a whole, week? Or
Yeah, a
something
week
like
ago.
that.
Yeah. Well, the economic news just keeps coming.
Yeah, so since then, mortgage rates have fallen to a new low. They're down another 1/8%. So a conforming loan, which means loans up to $417,000, so
Yep.
we can make it clear. Conforming loan, conforming no point with no origination fee, 30-year fixed rate, is now averaging around 3 3/8.
3 3/8.
3.375, which is ridiculous. A 15-year loan, fixed for life,
Yeah.
pretty much 15-year, and the loan is paid off, 2 3/4, no points. So what's happened is
2 3. I'm
2
still
3/4.
absorbing this.
It's
2
pretty
3/4.
crazy. Pretty
why,
crazy.
Why isn't the whole housing market booming under that? Because we've never seen interest rates this low.
Yes, and I have to say, more interest. I mean, you know this better than anyone else. More important than interest rates is the economy itself and employment. This is a recession that came to be because of the housing bringing the economy down. We need that to change. So we have a situation where people are not secure about their jobs, and businesses are not secure about hiring, and interest rates is the one reason why some of the data recently has improved so much, but it's not the whole story. Definitely rates are super low, because with QE3, now the Fed is purchasing $40 billion in mortgage-backed securities per month. That's about roughly twice the amount of mortgage-backed securities that are coming to the market for sale. So the loans that are done are pulled up.
Yeah.
So when they do that, they artificially push the rates lower. They can't do this forever, but right now it's
But right now is the time.
great opportunity
Yeah,
to
it's a
buy a
great
home, refinance, whatever you have to do.
All right, well, Mehran, thanks very much for coming by. You always make these complex matters simple, and I appreciate your expertise.
We could spend hours. This is a long
Oh, I know. There's a lot of stuff. We're going to take a break and come back. I'm Roger Hedgecock. Stay with us. More coming up after this.